dented by these GDP revisions. As a sterling bear, you'll be quite pleased about that?
Yeah, we think that sterling is certainly about to lose its shine. We've seen that investors are currently holding very large, long sterling positions, given that the data has been very strong recently. We think as going forward, we could see some more disappointing data from the data. So next week we have the PMIs in particular. These have been very strong recently. We think if we get a pullback in these surveys, then we could see cable move lower going forward.
But as far as you're concerned, it's the positioning which is the most stretched and therefore the main driver of lower pound, as you expect.
Yeah, we run quite comprehensive positioning analysis called BNP Paribas FX positioning analysis, and this indicates that sterling is currently the most crowded position in G10 FX.
Okay, you say it's going lower. How much lower?
We think we could see a move down to the low 150s, so around about the 153 area. And this will be a combination of sterling weakness, but also we think the US dollar has been oversold following last week's FOMC surprise.
Well, that's quite a bold call in itself, but especially given that sterling's technical indicators, cable, they're looking extremely bright. The daily moving averages, the weekly moving averages, cable's above them all.
Yeah, the technical indicators are quite mixed for sterling. You're right that we're trading above those moving averages. There's a medium-term bullish channel that cable's still trading in. There's a short-term bullish channel which we're just breaking out the lower side of. But also one of our quant indicators, BNP Paribas Steer, which is a short-term fair value model that we use quite a lot for trade recommendations over a 1-month horizon. This indicates that sterling is currently very overbought, so very much in line with that positioning analysis, and indicates that we should get a move lower in sterling back towards those low 150s over the next couple of months.
Oh, okay, over the next couple of months. You're also, you've got a short trade recommendation out on the euro. Again, quite bold. You see it going down another 7 big figures.
Yeah, we think that, again, the dollar is looking overbought against the euro. Also, we think the ECB is likely to remain very dovish and keep the door open to another LTRO payment. So, and we think that this is likely to keep the euro under pressure against the US dollar.
Okay, down towards 128. How much of an impact is the concern about the US fiscal worries and the debt ceiling, etc. in Washington? How much of that is playing into FX now?
Well, we've seen very little so far in FX, but the fiscal issues in the US really split into 2 key dates. One is the beginning of October when we get the new financial year in the US, and that falls next week. And the second we think is potentially could have more importance on FX, and that's when the US reaches its debt ceiling. And that's likely to come in late October. So we think there's still some time for the market to move to pricing in these tensions and the potential brinkmanship that you get in the US political circles.